All right, hey, welcome to the Hurley Investments Market View Commentary for the 23rd. We will not have Market View Commentary next Monday, as next Monday is what is next Monday? Memorial Day. Market is closed next Monday. Memorial Day is coming up, and we will have it next Tuesday instead of next Monday. So just to keep that on your radar so that you know. With that said, I'm going to walk you guys through some of the conversations Keith and I have had. Abraham, I love it, by the way. I love your comment there, but here we go. Our core holdings primarily are Apple, Bank of America, Baidu. I should put in here Boeing. I don't think I have it in here. Costco, Disney, Ford, Facebook, Google L, General Motors, the IBB, JP Morgan, Coke, Micron, Starbucks, Square, Visa, Target, Under Armour, Verizon. Those are our core group or our core holdings. If I was to ask you guys, tell me something about our core holdings, what would you tell me? If I was going to say, tell me something about our core holdings, what could you tell me? And William, yes. In fact, I'm amazing how quickly he said that. Undervalued. Which, again, I've gone over that. I've referred back to the January 10th where I worked out end of the year numbers. I would definitely say that they're undervalued. Mod, perfect. And I'm going to type it word for word. In fact, I might even change it just a little bit, Mod, but I agree. Mod says they are all strong companies. So I'm going to say they are all strong. I'm going to put S&P 500 companies, right? They are all strong companies that will not go to zero. And that's important because we need them to come back for our strategy to work, right? I like this one. JP Morgan's about to explode depending on what it does tomorrow. Even though they seem like they are on their way, Mod gave me a little laugh. Thank you very much. Dave, I really like that one as well. And that's an interesting one because I wasn't thinking about it. They are volatile enough. And if it's okay with you, I'm going to just put a little parentheses around that one, right? Parentheses, and I'm going to underline it. They're volatile enough. Let me get that fixed. To move so we can pick up more shares. And that's a great way to say it. I mean, I would say it a little bit differently, that they're volatile enough that their movements give us that opportunity to pick up more shares with big drops down and they revert back. But the way you said it, layman's terms, perfect. They're volatile enough to move so we can pick up more shares. Absolutely love it. Anything else you guys want to add in here? If I can put a couple in here, they touch almost all of the S&P 500 sectors. They touch almost all of the, there you go. So I'm trying to use diversification, but that is not my primary source, right? Justin, would you reword that? I want you to go on that line, but would you reword that? And William, yes, I think we've done that. So huge upside potential from where they were at. I like it. But Justin, would you reword what you said there? Will you? I need you to restate that not being so vulgar. How about that? That's what I'm looking for. All right. So where I'm going to go with that is our glass half full, half empty, or do it runneth over? It's interesting that I was going to look at it today because what I ended up doing was taking a bit of a look and calculating the 52-week high. Oh my gosh, did that not save? Looks like I've got a couple of these, but why is this not? Dang it. Oh, there it is. So why do I have two of these? I don't know why, but I've got to stick with what I've been doing here, making sure we're all in the same thing. And this is a read only. So I'm going to do File, Save As. Let's make sure it saves. Okay. So I'm just going to give it a 1 so that we save it. It's really interesting. Don't want to do that live. All right, give me a quick second here. Having a bit of an issue. I understand we can't do that. I don't know that. Come on. What a joke. Last modified 44 minutes ago. All right, I guess I'm going to work through this one, which is a little scary because if I've got the other one, why are they not both right there? If someone knows what I'm doing wrong, feel free to tell me at any time. And all right. That was a little strange. So what I've done to give us just a general idea, Apple's 52-week high was 182.94. Its current price, and this was as of yesterday, as I was preparing this, was 137.59. It was down $45.35 or 24.7%. And all I'm doing, and I will just go down here to Under Armour, right? All I'm really doing, nothing too spectacular. It's nothing really exciting. All I've done is I'm literally got to get this out of the way, squish it over. All I'm doing is I'm taking $27.28. All this was gotten from CNBC. Subtracting what it's worth right now, $9.64. And that was telling me that Under Armour's lost $17.68. $17.68 or 64 cents, whichever one that was, 64 cents. I then take the loss and I divide it by the 27.28, the highs. I divide it by 27.28, and that equals a 64.66% downside movement. I'll do one more. I've got Verizon 57.61 minus the 45, 49.53. So again, 57.61. Come on. 57.61 minus 49.53. It's down $8.08. One of our better ones, by the way. $8.08. I wish I could type today. And you divide that 808 divided by the 57.61 equals a 14% drop to the downside. And that's all I've done. As I think about it, Boeing's down 52%, Bank of America's down 32%, Baidu down 40%, Costco 31.98, Disney 45.4, Ford 51.68, Facebook 49.6, Google 28.1, General Motors 47.3, the IBB 34.8, JP Morgan down 32.1%, Coke's been a winner, down 9.25%, Micron down 30.01, Starbucks 41.9, Square down 71.15% over the last 52 weeks, or the yearly highs. Visa 21.2, Target down 42.24, Under Armour 64.66, Verizon 0.14. And now I have some thoughts. And my thoughts, in a roundabout way, about our core holdings that are blue chips and this and that. Our core holdings suck. That was the first thought that came to my mind. My first thought was, you know what? Our core holdings suck. And I'm saying that about Apple, that inflation won't affect them because they have more money than is needed. They're going to be in great shape. Boeing, 9.5-year log of business. It doesn't matter what happens. They've got 9.5 years. In fact, their stock is worth less than their order book right now. Bank of America, 2 good earnings in a row through inflation. Baidu, that's one I don't have the same thing I can say about it. But there it is. There it is, and that's what we're doing. So Disney, Costco. I mean, I went through most of these, and the second thought that I had was, thank goodness we are making something, can't type, something up on the way down. Thank goodness we've added some shares and have a lot of cash to add more. A lot of your accounts, if you've taken a look at it, are somewhat cash heavy, right? Thank goodness we aren't, I should say, all in tech, bonds, or metals, right? The neat thing is the upside is huge. And I found it interesting because this all came to me through a little article in what we call KSL News out here, how to become more grateful and why that will make you happier, healthier, and more resilient. And it was interesting because my wife actually pointed this out to me. And her comment was, you've done pretty well through this downturn. And I was like, oh, you should look at accounts. This sucks. You should look at our account. It sucks. And her comment was, well, help me understand. And her question was, help me understand leap long calls that are our replacement for stock ownership, which I thought was somewhat brilliant, right? And it comes all the way back down to this chart for my wife. Apple, it cost us like $27 to use that leap long call to stock replacement strategy, whereas it's been down as much as 45. The big one was Square. We spent like $27 on Square that lost $205. And the comment to my wife was, thank goodness we only spent like $23 and $27, because we could be down if we were just holding the stock $45 and $205. She's like, well, we're in Under Armour, we have shares. I'm like, yes, we are in Under Armour, we have shares. Have we lost $17.64 a share? No, honey, we did a really good job protecting it up at 25 down to 18. Not such a good job from 18 to 15. Pretty good job from 15 down to, well, from 16 and a half down to 10. So our groups, 25 to 20, excellent job, made up almost every penny. 20 to about 16.50, and not a very good job. And then from 16.50 down to the $10 mark, we did an excellent job. And I was walking my wife through the ability of what protection does and what those leap long calls do. And it really comes down to this. And I think I need to say it to the group because it'll be interesting. Leap long calls lose less than stock ownership, and it could be significantly less. And protection makes up downward movement, so I don't freak out. And the reason why I love my wife, she goes, well, if you're not freaking out, I'm not going to freak out. And with that, I kissed her and I said, go take the girls away and go enjoy your week till I'm done working this week. And I think it's those simple understandings that make what we do at Hurley Investments here important. Obviously, once again, and I could ask you guys, what happened the last time the S&P hit correction territory? Anyone know what happened the last time the S&P 500 hit correction territory? Anybody know? Anybody able to tell me? There you go. Of course, William. It bounced, right? Last time that S&P 500 hit correction territory, it bounced back to break even. So that's the history side of it, right? You guys want to learn how stupid it is just to do technical analysis? What's difference between now and 2020? What is different between now and 2020? And this is why, with all due respect, if people are spending money on technical analysis and charts, and last time, I'm going to prove to you why it's so stupid to be spending money on these technical analysis charts and everything. This is going to be awesome. What's different? Wow, you guys just keep typing them all in, right? Keep typing them all in. Inflation, roaring economy, Trump as president. I love it. China under control. Higher interest rates and less liquidity. Abraham, if I'm saying that right, let me know. We have war. We have the new coronavirus. In fact, I'm going to put this in here only because Kiva is going to kill me. And you need to look at it on good old good old CNBC. Where is it? It is called the monkeypox outbreak. That's what it's called. The WHO is giving us a monkeypox outbreak. I like it, Jim. Political melees, food shortages, oil problems. All of that is different this time around from the last time that the chart broke through the 50-day to 200-day, hit a 20% correction, quote unquote, on the S&P. So would someone please tell me, why are people only trading on technical analysis? Why does technical analysis mean or matter anything right now? They ain't too smart. William, dumbasses. I love it. Yeah, it's just not, I don't know. I don't know. Because it's a current reality. Because past performance doesn't guarantee future results. This is sentimental analysis this time. Because fundamentals might matter more than technicals this time. Because technical analysis trading by itself is stupid. Oh, you mean you got 3 or 4 legs to your stool, right? Guys, I agree. I agree 100%. The reason why we call our trade is because that allows us to be wrong. It allows us to be wrong. It allows me to not guess right, but we're still going to be okay in the long run. That is what we do with collar trading. it's a process where I'm not telling you guys to just wait. We're actively doing something to help your portfolios. We use leap long calls so we don't take big drops down on just stock ownership sitting there by itself. It gives me something to work for you and for my accounts. It takes a hell of a lot of work. And that's why we don't just do strictly technical analysis, strictly fundamental analysis, strictly an algorithm, strictly this, strictly that. None of it works. Together, it gives you a good idea. And I'm going to send you guys a link. It's a link to, I think it's the Wolf of Wall Street, but it's a link about how honest Wall Street is. And Wall Street is not honest at all. Maybe at the end of this, I'm going to stop recording and I'll get that link on so you guys can hear just how honest Wall Street is and just how disappointed you're going to be when you see how Hollywood portrays Wall Street. But on this one little video, I think it's 1:30. It's very accurate. I'll play that when we're done here. All right, so here we go. Please feel free to read through my grateful article. I found it important in industry and interesting. We have Baidu this Thursday. In fact, we have a lot coming up this Thursday. Let me get to that here in a minute. The big picture I found very, very interesting because the very bottom, what it all means. And the short answer of what it all means is the stock market is oversold on a short-term basis, and it has the potential to wave a powerful rebound effort with investor sentiment being as depressed as it is, cash flows among fund managers being at their highest since 1911, according to the B of A Global Fund Manager. We could probably and will probably see in June maybe as high as an 8 to a 10% bounce to the high side, which means we've got to start to prepare for what I would call a tactical rally. In fact, that's funny. They actually said it right here. It's right for a tactical rally. As much as I don't like technicals, there's certain technical numbers that come up again. 8.3, 16.8, 23.8, 33%, 50, 66, 75, 100. They follow Fibonacci and Elliott waves. It's just herd mentality. We're at that 20% level where we might have a couple more days of 23%, which is an Elliott wave, Fibonacci, herd mentality, that things are cheap and people buy back in. I found that interesting because I think we could be at that point. Today was a big update. We did not rip everything off, but a couple things that we could reposition, we put into place for today. A comment was just made. Risk aversion weakens confidence and risk taking when leadership is irrational. Isn't that the truth? And with that said, I'm not a Biden fan, but there's some things that Trump also did that seemed or acted irrational. Let's face it, he just got pissed off and canned people. He treated them like it was a company, not the United States. Very, very interesting on how things work. But short term in June, our expectation is we could see a pretty good bounce back higher to get ready to re-protect for our next leg lower and looking at earnings season in July. Our market recap also, yeah, I'm not gonna spend time here, but The big thing is we went into correction territory. Okay, if I go ahead and I'll add in our charts, we're going to see Thought I already had them added in. This is kind of weird that things are a little different. The Dow Jones Industrial Average, not oversold. It's coming off of it, but that was today's move. Kind of a move right there. We're down holding a pivot point. The pivot point is an S2 level pivot point at 31,215. Quite a bit lower, 20% lower-ish than the 37 up there, right? Dow is not quite down 20%, but it is close. Good news is the Dow is just a talking point. No one ever really uses the Dow. More importantly, we have the S&P 500. This is a benchmark I'm stacked up against. Don't know why. It looks exactly like the Dow, but two interesting points. Right now, we have a bounce off of our S1 3814, and we're right up against our support level, which is actually, what's a support, S1 support, but it's acting as resistance to us right now. In fact, we are slightly over it by $1, it looks like. Interesting to see if we can regain it tomorrow. The futures right now look absolutely horrible. Snap pre-reported that they were going to miss top, bottom, and revenue for the year. So the futures all dropped when Snap pre-announced, but they're recovered by half. So we're looking better. We're looking better already. Futures again, very few people trading, not hardly ever really important. And then our NASDAQ, poor NASDAQ, looks almost the same. We are bearish, but we have some movement. If you're to look at all three of these charts, we have some movement that looks to at least get up to the 50-day. So some pretty good movement to the upside. The 50-day on the S&P is at 42.98. From 4,000 up to 42.98, we've got about a 5 and a bit percent upside opportunity there. Maybe not 10, but 5 and a fifth. Same thing there, which probably means we have a 7%-ish, 11, 535 up to 13, about a 6% to the upside. So we could look at a small bounce up to the 50-day simple moving average. Don't forget, though, next Monday is a holiday. All big money will most likely be out of the market by Wednesday. Thursday or Friday, we will not be making any decisions on movement because that movement will be basically retail money. Zoom reports today after the market closes. AutoZone, Best Buy, Nettie's, Ralph Lauren, Nordstrom, Toll Brothers, Urban Outfitters, and Abercrombie and Fitch on Tuesday. Dick's Sporting Goods, Guess, and NVIDIA on Wednesday. Thursday, Burlington, Macy's, American Eagle Outfitters, GPS, don't know what that is. I forgot already. Guess, so that's Gap. Guess is on Wednesday, Gap is on Thursday. Marvel, Ultra, Alibaba, Baidu, Dollar General, Dollar Tree, Costco. Big Lots on Friday. Economic reports, durable goods, GDP on Thursday, already expected to be negative. So, not looking good. Personal income, personal spending are looking to be positive. So we might have those 2 days offset each other, but big money will usually be out by Wednesday. And if durable goods is negative, let the sell-off begin on Wednesday. It's expected to come in at 0.6 to the positive, though. Very interesting article on tech stocks. Their losing streak is the worst since 2000. Some really good understanding of recessions and so forth that I found in here. So a lot of people are starting to ask me about recessions. So I kind of felt, let me give you a little taste of what I've seen. A very good article on recessions, length of time, how long they happen, what you should be paying attention for. Here they are. Please feel free to read through this. Keith and I go through it on quite a bit to go over and help other people understand. Is there a recession coming? Our numbers still don't show it, but it's looking more and more likely every day. Interesting comment that traditionally called the 2020 market bottom, says a shocking rally is in store. Just again, more information for you to go by, to read through. I think you'll find it quite interesting. So please spend your time going through some of the studying that we do. With that said, any questions you guys have that I can try to answer for you today? Any questions you guys have that I can do the best I can to answer for you today? I knew it. So yes, I think we have some kind of relief, R-E, I don't know. I'll just say it this way. Some kind of, let's just call it a short term rally, because we are oversold, and it would be somewhere to that 5 to 10% range, higher, probably coming in June. So yes. Comment from Mon, I missed it. Is Snap that important of a company to affect the futures that much? No, in fact, Keith and I were both talking about it. Snap is not really that big of a company at all. But the moment Snap released their pre-announcement, everything tumbled. So we're just following what is happening there in the near future. And with that said, we are going to we're going to follow through, and we're going to have a little bit of a we're going to have a little bit of, I don't even know what I'm telling you. Let's just face it. The short answer is it shouldn't affect it, but it did. And I do think we'll have a relief rally, but it might not happen tomorrow. But again, things are on sale right now, and we'll go from there. Jim, I've got a call immediately after this, so it will probably take me half hour, 45 minutes till I can call you back. With that said, I told you I had a pretty interesting video for you. Let's see if I can find it. So I think this is a YouTube, and boy, it's an Instagram, huh? Wolf of Wall Street, Hustlers Influence. Let's just go to this, see if I can find it. I'll have to email it to you guys. So yes, I got a video, but I will need to email it to you, or let's see if I can forward this I'll have to email it to you guys. Sorry. Or we'll see it next week as I come on. Someone remind me and I'll get it ready for us for next week. So that's what I'll do with that, guys. All right. Do I see any other questions coming in? Anyone else? Justin, that's a great question. So, Justin, the short answer is I spent all 3 weeks going through hundreds and hundreds of stocks. I just make a list throughout the year. And these are the ones that I found to be core holdings that I spent my time finding if they were good deals, if they were could possibility go higher, a 20% upside, their fundamentals were good. I did all my research on these. Now I still go through them, especially when we have these big drops, especially with news for Boeing. I've checked a couple times. Facebook, I've checked a couple times. Square, I've checked a couple times, the ones that are down the most, right? But everything still looks intact. So yes, I do move through core holdings, but I basically spent my whole Christmas, New Year's, a 3-week period of time pounding through stock after stock after stock. Again, go through to the January 10th, 2023, my Hurley investment videos, and you'll see how I spent my Christmas time, what I spent my Christmas time doing. That doesn't mean that things can't come off or come on. Google's come on this year. It was not on my list. General Motors has come on this year. It's not been on my list in the past. So those are some of my new ones I've had for this year. And actually Coke came on this year that was not on my list previously. So yes, I do move in and out of my stocks, but I make sure I do it with a reason, not just because they're going down or I don't like them. So Justin, I hope that helps you out. Okay, I don't see any other comments coming through. Guys, have a great week. Enjoy your holiday. Keith will be with you guys on Thursday. Jim, as soon as I'm done with my phone call, I'll give you a quick buzz. Talk to you guys later. Have a great week, and I'll see you again next week. Next Tuesday, not next Monday. Markets are closed. I will see you next Tuesday. Good night, everyone. Bye-bye.